just understand the TDS provisions towards the rental and the sale of assets in India by non-residents. What are the implications of those TDS provisions?
So yes, so when a resident is making payment to a non-resident, and the nature of payment being rental or a short-term capital gain or a long-term capital gain, the TDS provisions will get triggered. So for a rental, when a resident Indian is paying a rental income to a non-resident, then the TDS rate is at the rate of 31.2% on the gross rental. If you want to reduce this tax rate, then NRI can make an application to the income tax officer for a favorable tax rate, and based on his income tax rate applicability, income tax officer can issue a certificate stating that a lower withholding tax has to be applied. Otherwise, if there is no application done to the income tax officer, the tax rate applicable is 31.2%. On the short-term capital gains, the tax rate is again 30% plus surcharge plus the cess, whichever is applicable. Surcharge and cess is dependent upon the amount of income which is earned. So broadly, like up to 1 CR, it is 2%, and then there's 12%, and education cess is 4%. So these are broad rates which are applicable for surcharge. But yes, the broad tax rate is 30% on short-term capital gains. And for a long-term capital gain tax, the TDS rate is 20% on the gross amount. Please bear in mind, the rates are on a gross amount, not on the capital gains. So let's take an example. If you have sold a property for say 2 CR, and your purchase cost was 1 CR, and assuming for the sake of simplicity, your capital gain is 1 CR out of this property. The TDS rates are applicable on 2 CR and not on that capital gain.